The CNBC App. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC App today.
Oh, very warm welcome to you and welcome to Squawk Box Europe. I'm Juliana Tattlebaum with Steve Sedgwick and these are your headlines this morning. U.S. China trade talks enter a second day in London amid reports Washington may relax chip export curbs if Beijing accelerates rare earth exports. President Trump says a deal is in everyone's interest.
We want to open up China, and if we don't open up China, maybe we won't do anything, but we want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
The White House deploys U.S. Marines to Los Angeles, escalating tensions with protesters and California Democrats who argue the move violates federal law.
OpenAI hitting $10 billion in annual recurring revenue, fueled by growth in its consumer and business ChatGPT products. We will chat, though, about when this company reckons it's going to get to profitability later on the show. Morning.
Good morning.
Seriously? Seriously? So you were hunting this time yesterday for the secret location of China-US talks, and you didn't think of Lancaster House?
Well,
come on, JT.
It was top
That's
of the
where
list.
I was 2 weeks earlier for the UK-EU talks. Wasn't that your first choice?
It was a pretty obvious contender, but
yes,
but
you chose a location right near your flat on the river.
Here's the thinking: it was convenient. It was convenient. I'm not going to lie. We had an early start. It was a little bit of incentive there.
You chose a location near where the Archbishop of Canterbury lives.
Well, we chose a location because in the event we were wrong about Lancaster House, we'd be stranded in front of this house that the talks weren't at. At least we chose a neutral backdrop.
That was the key tourist. When I'm running down the South Bank, I do a little bit of jogging down there, and you should join me one of these days. There's a log jam where every tourist in Britain chooses to take their photo with the House of Parliament. You chose that exact spot.
It's absolutely brutal. We were it was a little early for the tourists, thankfully, if we'd stayed there. But we got the call that the talks were at Lancaster House, so we literally just scrambled and ran there yesterday.
I know, you had to change location.
Yeah, it was
When are you leaving? And then they said, it's Lancaster House, and then you had to scramble back.
The life of a reporter.
Is there a rumour you're going back again today?
There is. We'll see. They're meant to kick off today, 10 a.m.
You know the anchor code, you're not supposed to do double shifts.
We'll take that up with
our
boss after the show. Well, let me bring you up to speed with the latest. U.S. China trade talks are set to resume in central London today. I will be there this afternoon. Senior officials met for more than 6 hours yesterday, hoping to ease tensions between the world's two largest economies. Speaking from the White House, President Trump was optimistic on the negotiations.
We are doing well with China. China's not easy, just like your home country is not easy there. I think we're doing very well. They're over there now. I'm only getting good reports. It's a little early, but they'll be calling in soon. In fact, probably when I get back, I'll have my first call from them. We want to open up China, and if we don't open up China, maybe we won't do anything, but we want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
We were gobsmacked in Geneva, back on to being moderately more serious, about the huge litany of detail we got. We expected soporific platitudes, but we got a lot of detail, and that was something we're all thankful for, and the markets were very pleased about as well. We haven't had anything yet. We've had kind of loose comments about hopes and jet engine parts and rare earths and ethane and chip making software, etc. But did you garner anything solid to add to what we knew from Geneva yesterday?
Well, yesterday we got basically two words on the back of these.
Oh no, two other words. Sorry, please.
Two other words. Once we got that secret location revealed. No, but we did hear from Howard Lutnick at the end of these 6-hour talks and Scott Bessent. They basically said the talks were fruitful and that they went well. Now, notably on the Chinese side, we didn't hear anything. He Lifeng, when he left, didn't say anything to reporters. So we really don't have a lot of color around what happened. We have some comments from Kevin Hassett from earlier in the day speaking to our U.S. colleagues. He said these talks would yield a result very quickly. A handshake, he thought, that would unleash these rare earth metal flows from China. But we don't have any clarity on whether that's actually going to happen.
Let's get an expert view on what this means for the world with Joe Davis, who's Global Chief Economist at Vanguard. And Joe, you've written a great book as well, and I want to talk about that a little bit later on. But first of all, this relationship is symbiotic. It is essential for the global economy as well. The thought of divorcing China and US seems to me quite extraordinary as well. But where do you think we're at with that relationship?
Well, again, I think there's a near-term assessment and there's a longer term. There's certainly competition from a military and economic perspective. But what we are going to see is ultimately tariffs coming down. It's a high likelihood. I think the financial markets are assuming that's an eventuality. But I think this is natural, seeing these tensions. It's part of negotiation. So I don't have expertise in how the political negotiations will go, but the economic damage in the interim will be significant if we don't see these tariffs coming down. So that said, it's in a backdrop of diversification of supply chains. That does not mean that we are deglobalizing. It means the sources of trade will vary over time. And we've seen this before historically. So I think we've got to be careful when we say deglobalizing. Yeah. It's sourcing the regions rather than a complete...
I know we can't extract it, but I want to try and extract everything we've heard about tariff angst from Trump, Biden, Trump. So the last... two and a bit administrations, and actually just look at where these two countries are in the economic cycle.
Yes.
And there isn't an industrializing nation on the planet that hasn't gone through a very slow period after double-digit growth. It's happened in every industrialized nation from Britain onwards in the 17th, 18th, and 19th century. Yes. So the Chinese are going through that. Yes. The United States has had a terrific growth cycle as well. Again, we think we're near the end of that. So even without all this, surely times economically would be a lot harder for both nations going forward.
Oh, certainly. And in China, again, it has been long documented for 2 decades, they need to rebalance. Less in manufacturing. As you get wealthier, you go more into services. The United States already made that transition. The developed world already made that. But during this transition, you have these trade tensions. And so it's more of what does it do for China in terms of their transition. But let's be very clear. They are moving from industrialization to more service-based economy. They need to do that given their demographic profile.
Yeah, sorry, just to add, the Chinese consumer is ripe for this. They've got, if they can feel more confident, they've got 44% of their salaries being saved. They are ripe for this.
Yes.
And the Chinese government is trying to get the spending coming, but it's not really working so far.
It's not. Again, they're trying to reorient their economy in a top-down fashion, yet they are also very reliant on the export sector. That's why these trade tensions, there's greater weakness in China than perhaps negotiators would potentially admit. And so at the same time, they know they have to do this rebalancing. You see it in their 5-year plan. They know it from a consumer perspective. So again, I think it's a great point. Every industrialized country has done this. This is part of becoming wealthier, which is every nation's ultimate desire and goal.
You know, it seems like the Chinese government is comfortable enduring a pretty high degree of economic pain here. But when it comes to what the Chinese government is probably not going to compromise on, it's long-term tech ambitions here. And you've done a ton of work, a ton of research around AI, what AI means for the world, really. Just characterize for us how transformative you think AI is going to be.
Well, it's not a foregone conclusion. However, our analysis looking over the past 100 years of technology says it's the most likely outcome is that AI is more transformative than the personal computer and the internet. That's a big statement. And so the biggest lift for growth will be it'll help create more automation. That is what's holding back China, the United States, Europe for sure, is the lack of automation in a service-based economy. So if you worry about demographics, you should be cheering for AI because that is where we're slowing down from a growth perspective.
And when it comes to demographics, I mean, that's one of the main challenges in Europe. But when we talk about the AI revolution here, Europe is also a laggard in this effect. So how do you think about the impact on Europe?
Yeah, well, again, one of the things that was eye-opening to me that we talk about in the book at a very high level is there's some forces that are overrated. They matter, but they're overrated. Demographics and debt are too. And some things that are underrated, things in terms of technology and how it may affect the workforce. We all know technology is important, but it is vastly more important than demographics and debt combined. And so Europe actually has some upside risk. It's not uniform. It depends how AI plays out. So a lot rests on AI. In the United States, we have a tug of war coming between our structural deficits that are building and the potential transformative ability of AI.
Let me go back to the book because we haven't introduced it properly. It's called How AI and Rising Debt Will Reshape the Economy and Our Investments. I doff my cap to you because having a new concept of putting AI, because I've read loads of AI books, and some of them are very good, and I've read loads of debt books, and some of them are very terrifying. But combining these two topics as in the title is incredibly novel. So just kind of expand a little bit more. You say AI is underappreciated, debt concerns and demographics are overappreciated.
Yes.
Give us
Well, all we've done is tried to create a data-driven framework to estimate some odds of how these paths may play out in the next 3, 5, 7 years. Scenarios as you think about them. No one has holistically quantified magnitudes and probabilities because if I have them, Steve, I can construct a portfolio for you that mitigates these risks or harnesses the opportunities. That is generally not done in the asset management industry, including ourselves until this project. And so at a very high level, it's saying that the consensus outlook that the IMF has, the Federal Reserve, all these organizations, is very unlikely to happen because there's a push or pull between structural deficits, which can push down growth and push up inflation, versus AI, which does exactly the opposite. And so how those two forces particularly will interact, it's the same dynamic for China, the UK, and the US. All have those two dimensions. High debt levels and deficits, they also have the potential for AI to transform, particularly the service-based economy. So that is the heart of the book, and we quantify the odds.
He or she, whichever country it is, that solves the AI growth solution or jumps on it quickest and creates the global architecture has the greatest chance of escaping their debt trap.
Yes, and we talk about in the book, the US and China are so far ahead of every other country, it's not close. India is a distant third. India looks like Japan in the early 20th century. So if you're going to take an outside bet or exposure, India would be a place potentially to consider. But it's the US and China. But there are other countries that could harness those secondary benefits. The UK jumps out, Canada, Australia. So we talk about that. And again, we're trying to do it in a very accessible way. What are these scenarios look out for the next several years? And then construct a portfolio for me based upon those risks. I can tell you the investment conclusions are perhaps more eye-opening than the economic ones.
In terms of the investment opportunities you see, can you tie for us the findings from this framework you've developed to the narrative that we're seeing the end of U.S. exceptionalism?
Yes. Well, again, we're assessing that. It's a pretty bold statement, but it's data-driven. We are assessing there's an 80% probability that we're going to have a significant inflection point in economic growth and inflation for all major markets, including the United States. And based upon these two broad forces of deficits and AI, yes, in either scenario, U.S. exceptionalism ends. But it's not all because of a bad reason. If AI is transformative, that means other countries, particularly Europe, start to harness some of these possibilities. And on financial markets, some emerging markets, China and India in particular, which have lagged, generally speaking, for the past 7 or 8 years.
We would love to chat to you for ages, but we've only got one more question, so I'm going to go for it. Vanguard has revolutionized investing once. Are you talking about, and I want to go back to this scenario where you say he or she, again, I'm using those terms, but whatever it is, whatever pronoun, who revolutionizes or understands the combination of the above, which we just talked about for the last 10 minutes, then we'll have a new window on how to create a portfolio as well, or create a better investing style. What are we talking about here?
No, I think what you're talking about is economic risk will manifest. Balance still matters. Cost and long-term orientation still matter. But there are ways that you could you could harness some of these opportunities, and it's not just being concentrated in tech stocks. That's the one economic thesis and lesson that emerges from this. Because everyone hears AI and they think I should overweight tech. History, as well as our analysis, says even if AI is transformative, you want to do the exact opposite.
So does that mean investing in sectors like healthcare, which can benefit
if AI
from
is going to be a general purpose technology, tell me how a hospital is actually harnessing greater productivity. Tell me how an asset manager, a bank is doing it. That's the history of electricity to computers to what will be AI.
I hear you. It's a great premise and something we've talked a lot about. Joe, it's been a brilliant conversation.
No, thank you for having me.
No, you're a real pleasure, and I'm looking forward to having a look at the book. Thank you very much for that. Joe Davis, Global Chief Economist at Vanguard.
Let's take a look at U.S. futures and see how Wall Street is poised to open today after investors have had some time to digest the Apple Developers Conference, what we heard there. And then, of course, also factor in that U.S. China trade talks are now entering a second day. You've got a pretty muted start to trade indicated at this early hour. Of course, we've also got the CPI print coming out tomorrow. Meanwhile, in Los Angeles, the U.S. is set to deploy around 700 Marines to the West Coast city amid rising tensions against President Trump's immigration policies. The announcement comes on the fourth day of violent protests triggered by immigration raids across the city. The state of California has filed a lawsuit to block the National Guard deployment after thousands of troops took to the city's streets. NBC's Liz Kreutz filed this report.
A massive group of protesters again taking to the streets of L.A.
In this country, no human is illegal.
The city of Angels on edge after violent clashes over the weekend. Police in riot gear facing off with protesters who oppose immigration enforcement operations carried out by ICE agents. Tonight, President Trump saying he made a great decision to send 2,000 National Guard soldiers to the city.
People that are causing the problem are professional agitators, they're insurrectionists.
California's Democratic Governor Gavin Newsom opposed the president's move, saying Trump was manufacturing chaos and violence.
You had a disaster happening. I feel we had no choice. I don't want to see happen what happened so many times in this country. I watched Minneapolis burn.
All of this erupting in response to ICE immigration enforcement operations. More than 100 undocumented immigrants arrested last week. DHS saying most had final deportation orders, some with criminal records, including domestic violence and robbery. Mayor Karen Bass calling on residents to express their anger peacefully and blaming the president for inflaming the unrest.
I don't want people to fall into the chaos that I believe is being created by the administration completely unnecessarily.
The confrontations escalating over the weekend. This video showing DHS agents pelted with objects while inside their vehicle. And here, a restaurant worker helping a sheriff's deputy who appeared to be pepper sprayed.
Tonight we had individuals out there shooting commercial-grade fireworks at our officers. That can kill you.
Police firing non-lethal rounds to disperse the crowds, one hitting this reporter. The protesters taking over one of LA's busiest freeways, bringing traffic Sunday to a standstill. Crowds above throwing rocks and incendiary devices at officers. An electric scooter landing on the hood of a police car.
We're here on 101 right now. Protesters have shut down the freeway. You can see flashlights have been going off. Police are closing in. Protesters are running southbound. Let's go.
Our team pulling back to avoid the tear gas. Later, we watched as protesters vandalized multiple Waymo self-driving vehicles that got stuck in the chaos.
Things are escalating now. Protesters have lit 2 Waymo self-driving cars on fire. You can see the flames here.
Police cars and this American flag also set ablaze. During the clashes, many protesters waving Mexican flags, what's become a symbol of resistance against ICE.
I'm flying this proudly because it's a product of my personal identity, my ancestors.
Protesters opposing the National Guard deployment.
What do you think about the National Guard being brought in?
I think that it's ridiculous because where was the National Guard on January 6th?
This violence that I've seen is disgusting. We are overwhelmed as far as the number of people out there engaged in this type of activity.
The LAPD chief asked about the presence of the National Guard, saying he thought local authorities could handle it, but he's now reassessing.
Do we need them? Well, looking at it tonight, this thing has gotten out of control.
Coming up on the show, NVIDIA's Jensen Huang sings the praises of the UK as an investment destination as London Tech Week enters its second day. Plus, we'll continue our coverage of those all-important U.S.-China trade talks. Sylvia will be live from Lancaster House, and we'll dig into the private market outlook with Kurt Borkland, Executive Chairman of Permira. That conversation coming up at 8:30 London time. welcome back to the program. Let's take a look at European futures. What's in store for the European market open? We're about 40 minutes or so away from the start of trade. We've got green arrows across the board here. Nothing major in terms of the magnitude, but we are looking at a decent start to trade after yesterday. The benchmark stock 600 slipped about 7 basis points, breaking a 4-day win streak. Now, we've got some fresh data to digest out of the UK. Average weekly earnings rose less than expected in the 3 months to April, up 5.3%. The UK economy added 89,000 jobs over the period compared to a forecast 50,000. Meanwhile, UK retail sales grew at the slowest pace this year, rising 1% in May. According to data from the British Retail Consortium, non-food purchases fell more than 1% on the year, with lower confidence seeing consumers hold back on purchases of fashion and full-price big-ticket items.
Interesting, because they're keeping their jobs, they're getting 5% pay rises, inflation is tracking below their pay rise on average as well. So, you know, if they weren't keeping their jobs, I'd be more worried. But the fact that they are holding on to their jobs, given what you just said, I think it's fascinating.
I think it's an early indicator, but it strikes me as the first time we are seeing some cautiousness on big ticket purchases, because, I mean, retail sales have held up quite well.
I don't trust them.
Wait, what don't you trust?
I don't trust the British consumer. I don't trust the British consumer not to spend money. We can't help ourselves. Trust me, we're addicted to it.
No,
we have money in our account, we will spend. We won't save. It's what we are. We're British.
I'm American, so I mean, we've got money in our account, we spend. We don't have money in our account, we spend.
We're not Chinese on our savings, that's for sure. And again, much to our detriment. Right, ChatGPT maker OpenAI has hit $10 billion in annual recurring revenue. Gosh, must be worth about $400 billion now then. I jest, but only half. OpenAI has hit $10 billion in annual recurring revenue, the so-called ARR, less than 3 years after the launch of its popular AI chatbot. The milestone is a sharp increase from the $5.5 billion in ARR London OpenAI had for all of last year. I might come back to this, but London Tech Week enters its second day today after NVIDIA CEO Jensen Huang joined UK Prime Minister Sir Keir Starmer on stage on Monday. We ran all of it. It was fascinating television. Huang praised the UK as a great investment destination.
The thing that is quite extraordinary, and it's an incredible opportunity for the UK, is that AI is both a technology, but it is also an infrastructure. It's an infrastructure because it affects so many industries simultaneously. And it affects, of course, healthcare and government and education and manufacturing and financial services. Because this technology is so broad and so transformative to every single industry, it will be considered infrastructure, just as electricity was infrastructure, just as information, connectivity that came about because of the internet is infrastructure. Now we're going to have a new infrastructure, and this new infrastructure is called artificial intelligence. And it's vital that we invest in this infrastructure here in the UK, and with your support, we can do that.
Well, another man who was there. In fact, Archie, hi, how are you? I've got so many things to ask you. So many things. Some of them might even be about tech. So can I just confirm? We got the wide shot. That's good. Thank you, Adam. This is important. So you went to an outside broadcast yesterday, yes? In Olympia?
In Olympia, West
London. Was where the actual meeting between the Prime Minister and Jensen Huang took place.
Yes, that's where they sat down.
So you actually went to the right location yesterday.
I went to the right.
I just want to confirm for viewers who've been for the time. So you chose the right location for your outside broadcast.
That's right. Yeah, I was there. Yeah.
This isn't fair. We're talking about the U.S. and Chinese delegations. They weren't no one.
They weren't going to meet in Lambeth, were they? They weren't going to meet near your old flat, were they?
Arjun, I think Steve's got a question for you about tech.
Do you have a tech question? No, okay, that was it. We'll just get the location. Well, I can tell you about tech.
Tell me about tech. There you go. There's the easiest question you'll ever get.
Well, look, yesterday was fascinating. The Prime Minister and Jensen Huang speaking. The delegates there were all very excited about the presence of Jensen Huang.
Load of tech guys, bros and gals. Do you take tech gals as well? I don't know. You have tech bros.
Just tech people.
Tech people.
One said to me,
"What?
Without this man, there would be no AI infrastructure. Oh my God, he is Iron Man. He is Iron Man."
They say about Keir Starmer.
No, Jensen.
Sorry.
Then they proceeded to call him Iron Man. So very excited about the whole thing.
Sycophancy has hit the Richter scale.
It's incredible. It was incredible. But look, the other part of it, we talk about the infrastructure, we talk about all these LLMs, all these AI applications, but you know, what are businesses doing? Are people actually using this stuff? 2023 was all about sort of the new technology, 2024 was all about these pilots in businesses, and there was a lot of talk about whether businesses were just seeing this as a cost-cutting tool rather than the ability to generate revenue or create new business models as well. Has that changed? That's the question I put to Tanuja Randuri, who is the head of EMEA for Amazon Web Services, one of the big cloud players and AI players. Let's listen in.
52%, so over half of businesses are using AI consistently. And I think that's an important point. You do see a difference. Startups tend to be digitally very native, right? They're adopting AI into the core of their R&D, their product platforms, etc., end to end. And of course, they work with smaller companies and employees, right? So they're going to have to go lean in. We're seeing enterprises consistently use it too. However, they are more using it from a productivity benefit perspective. That isn't unusual because given the legacy that they have, they start to unleash the productivity benefit, reinvest that back into growth and revenue generation. So interesting point. 90% plus of businesses are saying to us that it's revenue growth that they're seeing from AI rather than just the pure classic efficiency. So you do see a difference, but there is absolute now, we are no longer in piloting only. We're really in delivering real business value. And BT is a very good example. I mean, they're a big company. We're doing a lot of great work with them. They've unleashed the Amazon Q solution to let their developers free up their time from tedious tasks. And that means those developers can put that time back in thinking about the next generation of products. So I think there's more to go for sure, but this is the time I think we see phenomenal lean in actually.
That was AWS's EMEA head there. A couple of interesting things, saying that she's now seeing businesses starting to generate revenues with these AI tools and freeing up time potentially for other tasks as well, which I thought was an interesting part. And I think that's why you're seeing so much focus from the government level, because they're seeing this technology as a way potentially to unlock economic growth. And you're seeing people like Keir Starmer and later this week probably Macron as well when we head to Paris and Jensen Huang heads to Paris, talk about the benefits of this technology.
Can I actually go back to one of our other stories? Yeah. And it was this excitement about the ARR. Annual recurring revenue over at OpenAI. I'm just going to be really boring and me and curmudgeonly and whatever. Okay, great. They've doubled the revenue from $5.5 to $10 billion. They reckon they're going to break even by 2029. They currently have a valuation of north of $300 billion, trying to get a funding round, I think with $40 billion involving SoftBank and others at the moment as well. I must be really rubbish at maths. I was going to use another word there. Because if by 2029 there isn't another rival on the scene doing the same kind of stuff, I'd be amazed. You've got a really big runway on that as well, 4 or 5 years as well. And others are doing it already. We know that as well. So how good is that profitability and the margin going to be by the time they get there? Bearing in mind at the moment, even at the best ARR, which is 10 billion, they're still trading on, by my poor maths, over 30 times sales. 30 times sales, and that's not a PE ratio, that's a sales ratio. Bearing in mind your average company in the States, what would you buy a company at historically, ladies and gentlemen, if you were buying 5-7 times sales? The maths looks really, really tricky to me.
Okay, let me try to unpack this live in my head as I think through all of this. So I think the first thing is on the valuation front, you know, we've seen, and particularly from SoftBank being a big part of the equation here, Masayoshi Son, I think, has made it clear that he's very willing to bet big money on technology he thinks is going to win for a long period of time. He did that bet on companies, founders even, not even technology at that point. He bet on Jack Ma and Alibaba in the hope that Jack Ma was the person who was going to lead Alibaba and this broader e-commerce push in China to the huge company it is today. That is Masayoshi Son's, I guess, investment philosophy, and valuation, to some extent, is less of a concern at this point, particularly when he's investing in what he thinks is going to be the winner. So when we think about valuation of OpenAI, a lot of that has been driven, I think, by the SoftBank part of the equation, and Masayoshi-san's disregard at some point for valuation because of his belief in the ultimate winner here being OpenAI.
And his belief in the individual,
and
Sam
his belief
Altman.
in the individual, Sam Altman. So that's my view on the valuation front. Not saying it's justified, but that's just where I think it's going. The second part of that is, just very quickly, on the broader technology stack. Can OpenAI survive? There are a lot of very interesting things happening out of China, out of Europe, on the open source front when it comes to models. And so this model game is very, very fast moving, and it can consist, and you're right, there could be an even better rival at this point. I think one thing the investors are betting on OpenAI is all these big deals and almost the backing it's got from the US government here, making it an incumbent very early on in markets is something they're hoping may be able to hold.
Above. We'll come back. I've eaten up all your time as well, but also the Musk-Trump fallout can only benefit Altman. We'll leave it there.